Good morning from our global headquarters in New York. I'm Menace Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
Back with a broad list of executive orders, Trump floats Mexico and Canada tariffs within weeks. A reprieve for TikTok. The social media app gets more time to reach a deal as the president halts a U.S. ban. And the World Economic Forum kicks off with leaders gathering in Davos. Good morning, Menace.
Danny, good morning. And it's the first day for the cash trading. Futures are open at the moment, up 0.5%. No universal tariffs, and these equity markets take their relief. Yes, there's a threat of 25% on Canada and Mexico. But benign Trump policies, Bank of America survey says, could spark a rally in some of the stock laggards. The U.S. overweight goes from record 36% in December to 19%. Roll it down, have a look at the bond market. 6 sessions, including today. We're down 25 basis points over the past 6 trading sessions. The max universal tariffs has been avoided for now, and so that emboldens the narrative that the Fed may still be in play. The 5-year forward, we'll talk more about that in a moment, is not breaking to new highs. But ground zero for reaction is in the Canadian dollar and the Mexican peso. Gradualism was the word yesterday morning. By the close of business last night, there was a risk of max tariffs on Canada and on Mexico, and so the Canada makes the lowest level in nearly 4 years, since 2016, I should say.
Yeah, some of the relief yesterday starting to wear out. We're also keeping our eye on some individual stocks this morning. Apple is falling this morning. It got both a downgrade from Jefferies, and its China iPhone sales plunged during the holiday period.
MicroStrategy and other crypto stocks are falling after President Trump omitted the sector from his executive orders on day one.
And finally, Intel is continuing to surge. There was a report end of last week, that the company might be an acquisition target, though shares up 5% in the pre-market hour.
Coming up this hour, Davos exclusive with the CEO of Saudi Aramco, and we speak to Geoffrey of BNY Mellon. But first, President Trump gets straight to work on his return to the White House.
We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people. China charges us tariffs, and we charge them very little, except for what I did. I put a lot of, we took in hundreds of billions of dollars. But until I came along, China never paid 10 cents to this country. I'm fine with legal immigration. I like it. We need it because we're going to have a lot of companies coming in to avoid tariffs. We're the only country in the world that does this with birthright, as you know. And it's just absolutely ridiculous. NATO has to pay more money. NATO has to pay 5%. World Health ripped us off. Everybody rips off the United States. And that's it. It's not going to happen anymore.
Back with a bang and an exhaustive list of executive orders. Joining us now, the host of Bloomberg Big Take podcast, it is David Gura. David, good morning. Long day for you, yes. A long day for everybody. I mean, a golden age, very different tone to what we heard from the president in 2017. But we went from gradual tariffs yesterday morning to the threat of maximum tariffs by the close of business on Mexico and Canada.
Just the threat, though, and I think it was interesting you say it was an exhausting day. I mean, the day evolved dramatically from the kind of formal inaugural address that he gave in the Capitol Rotunda to a more freewheeling speech that he gave to those who couldn't fit in that room afterward, to what he said at the Capital One Arena, the basketball and hockey arena in Washington, D.C., and then in the Oval Office, where he clearly was very comfortable kind of riffing on that stack of papers and executive actions that he had on his desk. So, no, we didn't get the maximalist tariffs that you were talking about on China, but in response to a question about Mexico and Canada, he said maybe by February 1st, those 25% tariffs will be put in place. So it's, I think, the Trump that we know from the last time he was in office, that being nobody dares forecast or telegraph what he might or might not say. When he says it, people react and markets move as well, and we saw that yesterday with the tariffs.
In all fairness, in Trump 1.0, it was about a year plus before we got any sort of broad tariff policy put into place. Does it signify, though, a Trump that's sensitive to markets, or a Trump team that's just divided and hasn't reached a decision yet on tariffs?
I think it's a little both. And yesterday I talked to one guest on radio who said maybe he's reluctant to put these tariffs in place yet because his U.S. trade representative hasn't been confirmed yet. So maybe it's just a bit more shrewdness about who's in place and what that person thinks about these broader policies that are going to go into effect. But of course, the markets are incredibly important to him. We know that very well. So I think there is this awareness of the fact that he sees reaction in U.S. and global markets and is reluctant, I think, to do anything that will upset the apple cart too much.
Listen, he declared 2 national emergencies, and he really did lean into, as he called it, make America safe again. So what is in play when it comes to the border? Because that's where he went to pretty much first off the bat.
And this is what he promised he would do on the campaign trail and through transition as well, that immigration was an incredibly important issue for him going forward here. So this first national emergency that he's declared on the U.S.-Mexico border is going to make it so that the return to Mexico policy is in effect once again, that if you apply for asylum, you have to stay in Mexico. You can't do it here in the United States. And we saw images of those who had appointments with Customs and Border Patrol scheduled to take place yesterday, now seeing those appointments canceled. So he's beginning to do that. He's saying he's going to work with states. He's going to get the National Guard involved here in patrolling the southern border especially. Again, clearly an issue he's talked a lot about and cares an awful lot about. The other national emergency has to do with energy policy. And again, this is something he's talked about quite a bit as well. He sees the need here for more exploration and production when it comes to natural gas and oil here in the country, despite where the price is and where it might be headed. He's making good on that. And I think it's worth stepping back here. Yes, there were dozens of these executive orders. Some of these have teeth. Others are just kind of directional, directing agencies and those working for his administration to pursue more policies than other and kind of walking back policies that might have been put in place by his predecessor.
One of the other tensions in the administration that I think we've started to watch unfold is between traditional MAGA, anti-immigration, real industry versus the kind of tech, the brotocracy, as one economist, David McWilliams, put it. If you just judge by the podium behind him, it was the tech titans that won out. Basically went them and then the cabinet behind him. Is there any significance in the direction, the remake of MAGA, and more of a Trump image going forward, just even based on who was invited to the inauguration?
I think it's worth us just pausing and looking at those images once again, because it was really extraordinary. Of course, the inauguration was moved indoors, and so that made the crowd size much smaller than it was in the past, and we know he cares about that. But you had these big executives, I think their aggregate wealth in that room, $1.3 trillion, many of whom were sitting in front of cabinet appointees and nominees that the president had put in place. So just an extraordinary statement in that regard to just see them there, see the level of influence they have. And I think you can kind of step back and say, oh, is this going to continue? Is this kind of a nice pastiche that the president has in this ceremony, or is it something more? But we see the level of engagement that they have had and are likely to continue having here. And you're right, this is a huge disconnect here. You hear from the likes of Elon Musk the importance of these H-1B visas and how important that is sort of for innovation and the sort of health of the tech sector in this country. I think that debate is going to be roiling and will continue here into this term.
It's interesting. Bernard Arnault was in that audience.
The whole family was
well.
there, I think. Yes, the whole Arnault family got tickets.
Bring the luxury as well as the tech crowd. There's three interesting areas: withdrawal from the Paris Agreement, the WHO, and the OECD. This speaks a lot about isolationist USA relative to the rest of the world, doesn't it?
I mentioned a moment ago kind of a number of these going back on policies the Biden administration had put in place. And of course, we watched as Janet Yellen, the now former Treasury Secretary, worked so doggedly on that OECD tax bill, for instance, and trying to get 140 countries involved in that, these 15% corporate taxes across the board. President Trump walking that back with just the flurry of a pen yesterday. And so I think that, yes, it's this reaction to multilateral policies that were put in place by this past administration. Again, sending a signal here that that's not the direction this country is going to go in going forward.
Yep, and it's only day one.
Only day one.
Only day one.
Day two. Here we are.
Well, now it's day two. We'll see what today brings. David Gura, thank you so much for that. Okay, let's get to some other top stories now that are trending on your terminal. ECB Governing Council member Peter Casimir is predicting a rate cut next week and potentially 2 or 3 more. He added that geopolitics pose additional risk to inflation and heightened price pressures that are likely to accompany President Trump's economic policies, as well as disinflationary forces originating in China.
President Trump is being sued by immigration advocates over his bid to end automatic citizenship for children born in the U.S. whose parents are unlawfully or temporarily in the country. The change is set to take effect in 30 days and would upend more than a century of U.S. policy and court interpretations of the U.S. Constitution.
Strong winds from the Santa Ana winds are putting Southern California back on high alert after 2 weeks of devastating fires. The National Weather Service says the gusts could be as strong as 80 miles per hour along the coast and valleys, while mountains and foothills could see 100-mile-per-hour winds through today.
Coming up on the show, U.S. exceptionalism may face a different reality in 2025. That's according to Jeff Yu at BNY. We'll join him next.
We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people. Canada's a very bad abuser also. Vast numbers of people to come in and fentanyl to come in.
When do you think you would enact those?
I think February 1st.
And just like that, in any comfort this market had that President Trump didn't sign an executive order specifically on tariffs was upended with those comments. The dollar started to strengthen after posting its steepest drop in a year. The Mexican peso weakening this morning by more than 1%. As it comes to risk assets, though, S&P 500 futures, those are holding on to their gains, as is this Treasury market. Joining us now is Geoffrey, senior strategist at BNY. Jeff, FX, risk, and Treasuries having very different reactions to a President Trump that perhaps looked like a win for more bark than bite. Did yesterday change anything for you?
So not at this point. I think tariffs are always going to be at the top of the agenda for foreign exchange markets. If you look at Canada and Mexico, maybe some of the surprises were that these two were at the forefront. But then again, that's been talked about as well. But then by extension, markets are thinking, well, are general tariffs off the table? What's going to happen to Europe? What's going to happen to China? So the bottom line is everything is on the table. And if we think about FX, if there are tariffs, then the reaction will be potentially rate cuts, lower exchange rates as an offset. So it's kind of part of the course right now. But will there be differentiation? Will there be general tariffs? I think now that's the next step for markets to consider.
Well, Jeff, yesterday was a start of the day, relief, no universal tariffs, and the bond market really took it to heart. We've rallied for 6 days in a row. Last week, you had Waller and the CPI. I look at the five-year forward, and that is not exploding higher. That sends me a clearer signal of what the market is trying to bank on for the moment. But is it naive?
I don't think it's naive if you look at the mix of policies, if done right. If you think about deregulation, increased energy production, things like that, you can make a case for it being disinflationary. Of course, people will take a different view in terms of tariffs, but it's about getting the mix right. I think given how markets are performing right now, it's about what is materializing, over the last 12, 24 hours versus expectations. And now, at least for the time being, there's just no need to revise inflation expectations. But then let's take a step back. For the US economy, the supply issues, the labor market issues, if that data doesn't come down, then bear steepening in particular, we still think that's a risk as far as the Treasury market's concerned.
Jeff, it does feel, though, that markets are in this strange no man's land at the moment where they believe that Trump isn't going to do anything disruptive to markets. But at some point, presumably, he has to come out either with a threat or actual action of putting big tariffs on, or else the bluster, the negotiating tactic, loses its ability to be a negotiating tactic. Do you think markets are overlooking some big action that President Trump might actually take? Are we prepared for that, what seems to be an eventuality?
So if I look at FX markets, for example, in the options market, clearly people are putting on insurance. I mean, even before yesterday's comments, within the options markets, if you looked at dollar Canada, people really were buying insurance. You look at where euro dollar implied volatility, options that was a sign that people were worried as well. So it's not about absolute levels sometimes. And I think for the time being, there's no need to massively reduce US holdings or add to US holdings, US exceptionalism. That clearly is in play. But after the gains last year, I think people can afford to just add as much insurance as possible. And if I look at that, I guess people are hoping for the best, preparing for the worst. And that seems to be the sensible approach for the time being. OK,
well, we wipe our brows, certainly that the China 60% tariffs aren't there at the moment. Your positioning, your US exceptional positioning has been in place. It's the strongest in 3 years. As you start 2025, there are many unknowns. But do you think that exceptionalism and the scale of that exceptionalism endures over the rest of the world, Jeff? Because Bank of America are saying something very different this morning.
So I think you hit the nail on the head there by saying the scale of exceptionalism. So if we think about it this way, US exceptionalism in terms of outperformance, so it still may deliver strong returns in terms of the dollar, in terms of equity markets. But are people starting to look at their dollar valuations, looking at US equity valuations, saying maybe on a relative basis, there's a case for Europe right now. If China gets reflation right, if China gets domestic stimulus right after Lunar New Year, heading into the March MPC, then is there a case to actually increase allocations, back to these regions, which, to be frank, have been unloved for a very, very long time. So it's not really about pulling the US down per se, but are there gaps to be filled elsewhere? So that's one aspect that we're looking at. But also the case, is it Goldilocks right now? How much more perfection can you get out of the US? That's one thing to consider too. So I think more rotation at this point, and that may inhibit US exceptionalism in absolute terms, but we need to be cognizant of the total risk exposure as well.
Even just within the U.S., Jeff, part of the narrative had been that there would be a broadening trade. You've seen some of that in the past few days. But if we just take the imagery from the inauguration, for all Trump likes to talk about manufacturing, it wasn't the CEOs of GE and Caterpillar sat behind him. It was X, it was TikTok, it was Amazon, it was Meta. Does that to you suggest the growth industries, what this administration will be targeting and allowing to have robust growth, and therefore maybe may continue to be the trade of 2025?
So those industries, as far as our allocations concerned, if we look at where our international investors are positioned, that still is firm, especially on a relative basis as well. But is the US just the mega caps? Is the US and just tech? So I think those are the questions that us allocators will really be looking at. And also around the world, is there a case for some catch up as well? Greater competition, for example. That's a point about US. I think intra-US rotation, that would be much more interesting. And those hallowed words, trickle down. How much can it trickle down into the underlying household, into consumer? Will affordability, real earnings come up? Will there be a case for the consumer sector as well? I think those are some of the areas which are overlooked. So absolutely, within US rotation, that could be one of the themes as well. Can mega cap exceptionalism, can that be maintained, is going to be an interesting play.
Well, they're certainly going to like the 25 basis point drop in the bond yield. Jeff, thank you very much. Jeff, you from BNY on exceptionalism. Coming up on the show with Danny and I, 75 days for TikTok. More on what's in store for the app. That's next on Bloomberg. Front pages from around the world. This is what we've got for you. First up, Washington Post. Ohio State beat Notre Dame. Notre Dame? We got it.
Good
she
word,
knew she was saying.
You're too cultured.
Yeah, Notre Dame to win the national championship. The number 8 seeded Buckeyes won with a 34-23 victory. This is also the team's first title since 2014. It's sort of an in-house joke.
I just want to say thank you to the production team who gave Manis the football read to do its
American football at that.
Okay, let me save you, Manis. This is what the New York Times has. The New York Times leading with former President Biden granting a wave of preemptive pardons in his last hour of his presidency. This was talked about a lot before the inauguration. He granted blanket pardons to 5 family members. Biden said that the pardons for his family should not be taken as admissions or acknowledgement of any crime.
And on Bloomberg, President Trump temporarily halted a ban on TikTok in the US, granting the app more time to find a buyer. He signed the executive order granting a 75-day reprieve from the US prohibition that took effect on Sunday.
Ooh, look at that. It says TikTok. My, what is that all about? Essentially with TikTok, I have the right to either sell it or close it. And we'll make that determination. And we may have to get an approval from China, too. I'm not sure. But I'm sure they'll approve it. I think you have a lot of people that would be interested in TikTok with the United States as a partner.
Joining us for more on this is Tamlin Basin of Bloomberg Intelligence. Tamlin, a lot was made of this over the weekend, pulling up TikTok saying we've been banned, but President Trump will bring us back. And then relief, President Trump has brought us back. Where do we actually stand on the viability of TikTok to continue in the U.S.?
Yeah, so if you look at the executive order, what it did is it granted 75 days of non-enforcement. So what President Trump is doing is directing his Justice Department and his Attorney General not to enforce the prohibitions of that ban. And specifically what it is it's telling the distribution partners of TikTok and the hosting partners of TikTok is that we're not going to go after you for liability. And that could be very huge because the potential liability is massive. We're talking about in the hundreds of billions of dollars. I think it sort of remains to be seen whether those hosting partners feel confident enough in this executive order to again start working with TikTok.
But then it comes down to what happens in this intervening 75 days. China signals they won't block a deal on TikTok, so it's the potential for a JV or an outright sale. How's that going to line up?
Yeah, so again, what you have to do is you have to look at the bill that passed Congress. There, what Congress was looking for was a total divestiture of TikTok. There has to be a qualified sale of TikTok per the letter of the law. So I think we're really going to have to see how these discussions take place and whether any sort of joint venture is going to work within the confines of that law.
And Tamlin, can you just kind of round things out? We're looking at Apple shares this morning of iPhone sales in China falling in the holiday quarter. Just where we stand with this?
Yeah, so I think what we are looking at is Apple is still struggling to get its AI features on those Chinese iPhones. And I think what these reports suggest is that customers aren't quite willing to upgrade that refresh cycle until those features are on the phone. I think that's the way we would look at it at this point.
Okay, Tamlin, thank you very much. Tamlin Basin there of Bloomberg Intelligence. Yeah, down 18% in the holiday quarter. But it's day one officially of these markets, going to open up today on day one of the official cash markets for the Trump presidency. Let's have a look at these markets. I mean, the Trump sort of technically lives, doesn't it?
Yeah, it does. It's a market that's decided there's more bark than bite. We got the bark of threatening 25% tariffs on Canada and Mexico, but no actual action. Risk assets still bid this morning, Manus.
And I think, those big, long duration Mag 7, they're going to take heart. You're down 6 sessions, 25 basis points on the long end of the curve. Coming up in the show, it is Trump's day one package of executive orders in context on Bloomberg.
From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger, Manus Cranny here. Let's set your agenda.
Back with a broad list of executive orders. Trump floats Mexico and Canada tariffs within weeks. A reprieve for TikTok. The social media app gets more time to reach a deal as the president halts a U.S. ban. And the World Economic Forum kicks off with leaders gathering in Davos. Danny, good morning.
Good morning, and it is risk assets still rallying despite Trump floating the idea of 20% tariffs on Mexico and Canada, but nothing specific. Therefore, you get NASDAQ up 0.6%. The Russell outperforms, up nearly 0.9%. Same thing goes for this bond market. Bonds can continue to rally. We are down by 6 basis points this morning for your 10-year yield, just under 4.6%. Where you have seen volatility instead is in currency markets. Euro weakening by 0.6%. Dollar versus the Mexican peso stronger by 1.33%. And Manus, I just think it's worth taking a pause here. Ian Lingen of BMO put it really well. He said that he thought that yesterday would basically be an event risk. And once it passes, we will be able to rally. And that's basically what we got. It passed, no big fireworks despite that verbal threat. And you have this rally that's able to continue.
And the risk was this, that if you had maximum universal tariffs across all of the promises, you were going to add 0.5% to the PCE. That would disrupt the Fed. That would disrupt risk globally. You haven't got that. You've got the risk of 25% on Mex and Canada. But at this juncture, no wielding the axe on China right now, for now.
I still think it's a no man's land for this market because it does believe that we're not going to get anything, that Trump doesn't want to upset stocks and bonds. But Manus, in order to be negotiating, in order to have negotiating tactics, you have to show flex. And what does the market do in that case if it doesn't seem prepared for that?
And this is the other argument. We just had it with Jeff Yu from BNY, which is, are you going to bank more on Doge? Are you going to bank more on deregulation and energy than you are on the ultimate impact of tariffs? But the tariffs pay for, you got it, your tax cuts.
Sequencing matters.
Well, 50% of the tax cuts, excuse me.
Thanks for the clarification.
You're okay. Got to get it right. 2.7 trillion.
But you're right. Sequencing matters. And just in this regard, Trump did waste no time. After returning to the White House, the president immediately got to work signing executive orders, everything from undocumented migrants to returning federal workers to the office.
We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people. China charges us tariffs, and we charge them very little, except for what I did. I put a lot of, we took in hundreds of billions of dollars. But until I came along, China never paid 10 cents to this country. I'm fine with legal immigration. I like it. We need it because we're going to have a lot of companies coming in to avoid tariffs. We're the only country in the world that does this with birthright, as you know. And it's just absolutely ridiculous. NATO has to pay more money. NATO has to pay 5%. World Health ripped us off. Everybody rips off the United States. And That's it. It's not going to happen anymore.
Back with us is Bloomberg's David Gura. David, from the executive actions we got, from what we heard from Trump, what did we learn about sequencing and priorities for this administration?
You know, I've been thinking a lot about his decision not to announce tariffs yesterday, and I think that maybe part of his inclination doing that was he wanted to kind of make that an announcement in isolation, that there were all of these executive orders stacked up. You saw him going through them with such rapidity. Maybe he wants to place more emphasis on the importance of that policy point. But as you heard from Scott Bessent when he was testifying during his confirmation hearing, his priority is on extending these tax cuts that were put in place during the first Trump term. And I think that we're already seeing conversations and studies taking place on the Hill, in the House. That's going to move over to the Senate as well. I think that's going to be a big priority here. Look, we had this February 1st day floated for Canada and Mexico tariffs. I think he will probably stick to something like that for an announcement of that shape. And we've seen in recent weeks leadership of Mexico and Canada commenting on what they might do in retaliation for that. So I think between now and then, we're likely to hear more bellicose rhetoric from both of those sides just about how they would respond if these tariffs are put in place.
Look, very much, yes, he was all about the executive orders, what he can do, rather than he left out a great deal of things that he's going to need Congress to do. Breaking line across the Bloomberg right now, Trump administration, Mull's selling some federal government office stock. Again, this is the Wall Street Journal playing into the narrative, bringing back the federal workers back to work and a freezing hire. So this is about the construct. We're beginning to understand a little bit more about what push Doge is going to have.
Absolutely. And so I think this is something that's still kind of startling. If you go to Washington, D.C., federal workers are not back anything close to every day. If you walk around the Treasury Department, for instance, it seems much emptier than it did before the pandemic. And I think this is something that has been a thing of frustration, yes, to the new president, but also to kind of other supporters of his, that you haven't seen anything close to return to office for federal workers. And so yes, that's one of the executive orders he signed there yesterday. Look, we saw Doge kind of come into its own a bit yesterday. President Trump is taking an existing organization, making that Doge now. Elon Musk is going to have some staff and an email address. Vivek Ramaswamy, we hardly knew you. He was, announced he's not going to be a part of it. He's going to likely run for governor in the state of Ohio, where he's from. So interesting to sort of chart what the latest iteration of that is going to look like, what he's going to be able to do here. But he has been obviously at Donald Trump's side throughout the transition, basically living at Mar-a-Lago. This is something that's clearly important to him. We'll see sort of how he translates that to actually working to change policies and budgets and staffing in the nation's capital going forward.
There had been reporting, though, that maybe not Trump himself, but some of the staff around Trump had tired of Elon Musk always being there. I guess we had those comments from Trump saying he's not a second president. That is not what Elon Musk is doing. But it seems like he is someone that still has a lot of power in this administration, even giving a speech yesterday, too.
He did. He gave an opening speech at that rally that took place in downtown D.C., and I think that there's still a palpable and obvious admiration that the president has for the genius of Elon Musk, the wealth of Elon Musk, the success of Elon Musk, and I think that continues to kind of animate that relationship between these two individuals. And you heard in the formal inaugural address yesterday the comment from the president about putting people on Mars, obviously something that Elon Musk cares a great deal about and is so tied to his business interests as well. So for the time being, and far be it from me to forecast how long that's going to last, there still is kind of a strong connective tissue between these two individuals. And again, we'll see sort of how long that carries on.
Well, at the rally, it wasn't just him; it was him and his kid on the stage as well. Talk about generations. Look, the president leaned into national emergencies also as well, and this is about the border, and this is about make America safe again. And this, he believes, he absolutely has a mandate for.
He does, and so we heard that in all of the speeches that he gave yesterday, particularly when it comes to immigration, but also to energy policy. But sticking with immigration and border security, he feels like he has a mandate to do more with this. He nodded to the governor of Texas during his kind of freewheeling remarks after that inaugural address that he's going to back him up more, have the National Guard go to Texas and other parts of the southern border to kind of help with kind of stemming on the level of immigration that we've seen there. So I think that that's the thing to watch most closely here, where he feels like he is able to kind of impose new policies and change policies through force, what that means. And of course, there is the specter looming large here in the background of legal challenges, and I think there will be many of these executive orders and immigration among them. But I think, again, when you kind of flood the zone in the way in which he did yesterday, I think a lot of people today are just kind of reading through those executive orders, trying to make sense of what they are, what they can do, what teeth they have. And when it comes to immigration, that's certainly part and parcel.
Yeah, when he talks about the present danger and imminent threat. David, thank you very much. Great coverage yesterday, you and the team. David Gura there on the very latest executive orders from President Trump. Coming up on the show, we take you to Davos, an exclusive conversation with the CEO of Saudi Aramco. That's next on Bloomberg. Bloomberg Brief. I'm Manus Cranny alongside Danny Berger here in New York. Well, the World Economic Forum, it's in full swing. Bloomberg's Jumana Basechi sat down with the CEO of Saudi Aramco. Let's take a listen.
It's still too early. We understand from the news there is 186 tankers that will be impacted. The seaborne that comes from Russia is around 3.4 million barrels. The rest is piped. If you add to that approximately seaborne production or export from Iran of around 1.6 million barrels. So in total, you're talking about 5 million barrels per day. But for the Russian tankers that are impacted by the sanctions, the impacted tankers, the volume that you are looking at is close to 2 million barrels per day. So it's still at an early stage. We will wait and see what is the impact of all of these things in the markets. But we started to see tightening in the market.
Yeah. Have you seen any inquiries from Asian buyers to compensate for some of that anticipated supply disruption?
We do have a large customer base, and we have a target every month in terms of governed by the target that we receive every month from the Ministry of Energy in terms of how much we supply the market. The ministry, through their analysts and their work that they do every month, they always try to balance the market. So the targets are matching their view of what is required to balance the market.
But you would be able to provide extra barrels if asked?
Well, you know, we do have spare capacity of close to 3 million barrels per day. So the upside for Aramco, depending on what target we receive, is there. We have the capacity. It's readily available, depending on the targets that we receive every month. But we have demonstrated in the past that that capacity can be brought to the market in a few weeks.
Do you think OPEC Plus will be able to bring the extra barrels back to the market this year without causing a significant shift downwards in the price of oil?
Well, as I mentioned, you know, they do have their own analysts and they have their own view, and they are good at measuring the market and anticipate what would be required to balance the supply demand. And this is where the targets comes to Saudi Aramco and the rest of the OPEC Plus from their different agencies. But it is always looked at in terms of a way of what needs to be done to balance the market.
Let me ask you about demand signals that are coming through from Asia, from China. That was a big swing factor last year. What are the signals that you're seeing there in 2025?
Well, we're seeing still most of the growth that we are seeing coming from Asia, China, India, and the rest of Asia. There is growth driven by liquid to chemical, for example, in China, transport fuel, majority also going as a jet fuel. So that's where we are seeing the growth that is coming. But the majority of the growth that we are seeing is coming from Asia in terms of the demand.
It's interesting what you say about transport fuel in China, because obviously there's been a big shift towards the usage of electric vehicles. Analysts are saying that we're getting close to peak oil demand when it comes to transport fuel. What do you see?
I think in China, as I said, there is a huge growth even for electric vehicles. The liquid to chemical, our strategy is to go to 4 million by 2030, about 4 million barrels per day. A lot of it is going into China. China, why do they need the liquid to chemical as a feed? They need it because of electric vehicles. They need it for solar panels. They need it for carbon fibers. So my point, even for the transition and going to electric vehicles, you need oil as a feedstock to produce the material that would be required for any transition. So the growth is still there. Instead of producing more gasoline and diesel, they are using the feedstock to produce more chemicals. You see a lot of the conversion, the refineries in China, for example, a lot of the one that we are investing in right now, the conversion of liquid to chemical is at 60 to 70%, compared to an average of about 10 to 12% integration in liquid to chemical around the world.
Do you think the market was sort of overstating the state of demand that is coming out of China, and the fact that people have been so bearish about some of the signals coming through there?
No, we're still seeing good demand coming out of China. We've seen it in 2024. We still anticipate, as I said, most of the growth, the 1.3 million, 40% of that growth will come from China and India. The rest is coming from the rest of the world. As I said, China, even when you talk about their move into electric vehicles and renewables and all of that, they need feedstock to create the material that will be used in these electric vehicles and these carbon fibers and all of these things. So we are seeing the demand, and demand is increasing year on year.
Let's talk about another supply driver. President Trump is back. He made a lot of declarations yesterday, but one of the declarations he made was that the U.S. is in an energy emergency. And just to repeat what he said, of course, repeating the drill, baby drill mantra, but he said, we will export American energy all over the world. We will be a rich nation again, and it is the liquid gold under our feet that will do it. What is your response?
I think, the U.S. today is a net exporter. It's not a net importer when you come at the liquid. The 20 million plus million barrel of oil and liquid that is being utilized in the U.S., they export, based on our calculation, close to about 2 million barrels. So they are a net exporter today. At the end of the day, what you need an energy that is affordable, secure, and sustainable. And that's the pragmatic view that we need to see, because you need to ensure that all sources of energies are available, as long as you continue to decarbonize and avail energy that is affordable. And that's, I think, the U.S. will do what's the best interest of the U.S. in terms of maximizing the value of what they have in the subsurface.
The Saudi Aramco CEO describing almost a tightening market with more demand from China and U.S. sanctions on Russia. Speaking there with Bloomberg's Jomana Bersecci in Davos. And we're going to have more interviews from the World Economic Forum in Davos throughout the day. Those will include the IBM Vice Chairman, Gary Cohen, Commerce Bank CEO, Bettina Orlop, and Bank of America CEO, Brian Moynihan. Let's get back to Washington, D.C. now, where President Trump temporarily halted the ban on TikTok in the U.S., granting them 75 more days to reach a deal.
Ooh, look at that. It says TikTok. My, what is that all about? Essentially, with TikTok, I have the right to either sell it or close it. And we'll make that determination. And we may have to get an approval from China, too. I'm not sure. But I'm sure they'll approve it. I think you have a lot of people that would be interested in TikTok with the United States as a partner.
Tamlin Basin of Bloomberg Intelligence is back with us. Tamlin, I got to say, time doesn't seem to be TikTok's problem, because they've had since last April to find a buyer for themselves in the U.S. What will Trump giving them 75 more days result in?
Yeah, and I think that's the key question. And not only have they had since last summer, there's been all indications from ByteDance and also initially from China that they are not interested in selling. What they were really fighting for, and why they took a case all the way to the Supreme Court, is they were trying to get this law deemed unconstitutional. Of course, the Supreme Court came back unanimously and said that is constitutional. So I think right now they see the only options now is to potentially comply with the law by divesting.
The question is, what can they do in those 75 days? A joint venture with the United States of America, and people are questioning even the legality of that proposition from an executive order. Who can do a JV with the U.S. government on TikTok?
Yeah, and I think that was a very interesting prospect raised by President Trump. If you actually examine the law that was passed, really what Congress wanted was a complete divestiture. They really wanted no engagement between the TikTok that exists in the rest of the world and the TikTok that is going to exist in the U.S. after this divestment. So I think it's going to be very interesting to see what might be able to develop that really complies with that law. And right now it's too speculative. We don't know really which direction it's going to go that way.
Tamlin, elsewhere, we learned that Apple, their iPhone sales in China plunging 18% in the holiday quarter. We had gotten some earlier data that suggested a slump in iPhone sales to begin with. We're going to hear from Apple at the end of this month for their earnings. Just how dire do their China sales look at this moment?
Yeah, I mean, this report shows that they look pretty bad. And one factor that we have is that Apple has not yet been able to roll out its AI features in China. It is seeking local partners to help get those features on devices. And I think at the same time, you have Huawei, which is really resurging in China and offering some top-end models that might compete. So I think it's these combinations of things that might kind of explain the slump that we're seeing in China right now.
Tamlin, thank you very much. Yeah, let's see what the AI products that they roll out. Tamlin Basson, there of Bloomberg Intelligence. Coming up, it's already been a busy week, but there's more to come. There are earnings, there's central bank decisions. We'll lay out the landscape for you in just a moment.
It's your Bloomberg Brief. Danny Berger alongside Manus Cranny in New York. Let's get you set up for your holiday shortened trading week this week. We're going to get Netflix earnings for the fourth quarter. Those come after the market close. Then we have some data, another round of jobless claims. Those come out on Thursday, and consumer sentiment on Friday. Perhaps a relief also is that it is the blackout period from the Fed, so at least we don't have Fed speakers. But we do have the BOJ announcing its rate decision also on Friday. And Manus, the narrative for them had been CPI data last week allowed them to hike. It just all depended on what we got out of Trump yesterday. So maybe the hike, maybe it's all on.
Yeah, certainly many red flags have been raised by Ueda and other people at the BOJ. Some stocks to watch. Apple, we've talked about it. The iPhone sales in China plunging by 18% during the holiday quarter. That's according to some independent research. And Geoffrey's actually downgrades the stock to underperform. So we're lighter on our feet. Tim Cook, front and center there behind Donald Trump, as you said yesterday. It was the tech bros. Intel up 4.25%. UMC says its partnership is on track, and UMC reported its earnings a little bit earlier this morning. Big move on Intel on Friday, Danny. That was a lot of speculation about M&A. General Motors, GM up 2.125%. Deutsche upgrades the stock to a buy. They see the company reporting the high end of their guidance range. But it is ground zero today. These bond markets reopen, Danny, and wow, what a move. FX and rates.
We have to differentiate between what assets are moving on Trump and which are not. It is notable that you continue to have bonds and stocks rallying, but Manus, as we've been talking about today, here is where you have seen the reaction. It is in FX markets. Jeff Yu of BNY talking about this, that if you want to look for a market that is sensitive to Trump, that is prepared for the worst, it is FX with CAD hedges being put on ahead of Trump. The dollar, though it was declining, started to gain after Trump mentioned yesterday that he's looking at 25% tariffs on Canada and Mexico to start on February 1st.
Well, it was like two extremes. Yesterday morning we started the session with gradualism. There won't be universal tariffs, and there weren't universal tariffs. And in the flick of one comment, it was bang, I'm ready to go February the 1st. That's a possibility, 25% on each. But here's the thing. Have a look at the bond market. The bond market, and we were just checking this out. It's not 6 days in a row this time, but it is 6 days that has seen a wholesale repricing in the bond market. Long end down 25 basis points, Danny, 20 basis points there over the 6 days. This is about the worst case scenario perhaps being avoided, and the inflation expectations not banging higher.
I have to say, I really think Ian Ling and Abimo got this right, that into Monday, he basically said it will be an event risk, and once it passes, it will essentially wave the checkered flags that bond markets continue to rally. That's what we got. We got an event risk, and the worst of what we expected didn't come to pass. Okay, that's it for Bloomberg Brief. Surveillance is in Davos and D.C. They'll take it from here.